It was another ugly day on Wall Street today. The Dow Jones Industrial Average followed up last week's 500-point plunge by nosediving 634 points. It finished well below the 11,000 mark. The Nasdaq lost 174 points. The S&P 500 fell almost 80. Today was the first chance for investors to respond to Standard & Poor's downgrading American debt. Also today, Standard & Poor's downgraded the credit ratings of Fannie Mae and Freddie Mac to AA. Fannie and Freddie own or guarantee about half of all U.S. mortgages, or nearly 31 million home loans. And the price of gold hit a record high, going above $1,700 as investors looked for a safer place to put their money.
President Barack Obama said today the U.S. is and always has been a AAA nation, despite that credit downgrade to AA.
Warren Buffett, who knows a thing or two about good investments, said if there were a quadruple A rating, I'd give the United States that. I and most of the world's investors agree.
The president also explained that the U.S. does not need a rating agency to tell it that its political system has some problems. The stock market, though, was not soothed. It continued to drop another 200 points after the president spoke this afternoon. Our Carson Chambers joins us now to explain how this downgrade could prove costly to almost everybody. Carson?
Hey, Brennan, even if you don't invest in the stock market, the S&P downgrade will likely cost you money if you take out a car or a home loan, or in some cases, if you are a college or a grad student.
The job market is plenty enough to get you down if you're a college student. Now, freshman Alexis Ramos has something new to worry about.
Well, my student loan is $25,000, and it's just really hard to be able to keep up with payments as is.
Student loans are just one way. Borrowers are expected to be affected by the S&P credit downgrade. Interest rates are expected to rise, which will bump payments higher and make other students think twice about even going to graduate school at all.
I have currently, I would say, $70,000 in student loans, and before I have a PhD, I should have probably $200,000 in student loans.
Elena Tackett says she still plans on borrowing for 4 years to get her English PhD, but worries about jobs when she's finished. And finance professor Dror Parnas says she's right to be concerned.
The biggest threat for businesses is uncertainty. That's the major threat for employers.
Parnas believes Standard & Poor's move was bold but validated. He says the downgrade will force interest rates higher for other kinds of loans, including home and car.
It will go up. Yeah, it's not going to happen overnight, but it will go up.
Ramos says if that happens, he'll have to get a second or a third job, or worse, this financially independent 17-year-old student will have to ask his family for help.
And Standard & Poor's has threatened further credit rating downgrades if the U.S. does not solve its debt crisis long term.